Good morning, Bay Area. This is John Payne, your host of Real Estate Radio Bay Area, on the Bay Area exclusive home for Fox News Radio, 9:10 a.m. And this is the RateWatch Now Daily Update Report. Here's a snapshot of the mortgage-backed securities market on Friday. Pretty much up and down day. We gave a little, we got back a little, but at the end of the day, we ended on the upside. What's going to make rates go up today? We have ISM, which is manufacturing. That is up a little bit and is really hurting bonds. And construction spending is up as well, but that's not really that important of an index. But, it's still up, so it needs to be reported. Here's what came out first thing this morning, and it helped the market have a gap up opening. And you'll see that personal income was down. Personal spending was up, but it was up much less than it has been in previous months. And personal spending is down, which is causing deflationary concerns. This should really help the Feds on their decision on Wednesday if they just haven't already made their decisions and just haven't informed us yet. This information came out first thing this morning, as I mentioned, to help with the gap up opening. This information here came out later on in the morning, and that is now causing a drag on bond prices. And you can see we opened up this morning, and this is actually a gap up from where we ended, because we ended on par 60, I believe, on Friday. We started up opening when the personal numbers came out, personal spending, personal income, personal pricing. All of a sudden, when ISM came up, you see what happened. So manufacturing is a huge push down on bonds. We have 27 lenders repricing for the better, because we still had that gap up opening. So therefore, they have to reprice for the better, because bond prices are going down. Here's a snapshot of what the market looks like. We have a trend line going up. You can see the gap opening. We opened up here this morning. And when the news hit of ISM, we started to come down. Now, this is still, in my opinion, a correction from the drop that we were dealing with last week. Now, remember, tomorrow, there's no news tomorrow. So the fundamentals are in control. And what came out today, unless something big happens before the Fed's meeting on Wednesday, I'm not expecting this to push up at all. We're going to stay around this level. We may go up a little bit, but it's not going to be that much. So we're not going to have much movement until Monday with the FOMC meeting. In summary, we have a mixed bag of news. There is no news tomorrow. Wednesday is the big day, the FOMC meeting. The Fed quantitative easing 2 is to be announced. We're back trading in the range of par 70 and 101.4. And Dow is rallying and may hold bonds down to the lower end of the range. Income and spending lower than expected, and this should really help the Fed's decision. Again, if they haven't already made up their mind, they just haven't released it to us yet. And keep in mind, this still may just be a correction ahead of the FOMC meeting. That's all I have for you today, Bay Area. Hope you had a great weekend. Go Giants, by the way. And if you haven't yet, please tune into my show every Saturday from noon to 1 on 9:10 a.m., the Bay Area exclusive home for Fox News Radio. And if you know of anyone that could benefit from my morning updates, please play it forward. Until tomorrow, Bay Area.